Thanks for joining us for the Purdue University CME Group Ag Economy Barometer survey results. I'm Jim Minter, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the results from the September 2022 survey. The Ag Economy Barometer declined 5 points this month to a reading of 112. That leaves the barometer down 10% compared to what it was in September 2021. The index of current conditions and the index of future expectations both declined as well. The current conditions index was down 9 points versus last month, and that leaves it 22% lower than it was a year ago. The future expectations index was down 3 points versus last month, and that leaves it down 2% compared to September 2021. Once again, we asked producers what their biggest concerns are for their farming operation in the upcoming year. And no surprise that 44% of them said that higher input costs are their number one concern. But this month we saw more producers choosing rising interest rates as a primary concern, with 23% of them choosing that as the number one concern for their farming operation in the upcoming year. The Farm Financial Performance Index was unchanged this month at a reading of 99. However, the Farm Capital Investment Index declined 8 points from a reading of 39 last month to a reading of 31 this month. Once again, we asked producers who said that now is a bad time to make large investments in their farming operation, why they feel that way. And the most common response, once again, was increase in prices for farm machinery and new construction. This month, 46% of the producers said that was the primary reason. Last month, it was 49%. That continues to be a big issue for farmers across the nation. Although the Farm Capital Investment Index is at a record low, producers are becoming a little more optimistic with respect to their plans for farm machinery purchases. Back in March, 62% of the producers in our survey said they plan to reduce their farm machinery purchases compared to a year earlier. This month, just 47% said they were going to reduce their purchases. Farmers' perspective on farmland values continues to soften. The short-term farmland value expectation index declined 5 points this month to a reading of 123 versus 128 last month. And that's down 21% compared to this time last year. The long-term index also declined. It declined from a reading of 146 last month to a reading of 139 this month. That's down 13% compared to a year ago. Once again, we asked producers who say they expect to see farmland values rise over the next 5 years, what's the primary reason they expect to see values increase? 62% of them said they think it'll be support from non-farm investors. 22% chose inflation, which is down compared to last spring when 35% chose inflation as a primary reason. We have noticed a change with respect to the impact of interest rates. Back in February, 9% of the producers said low interest rates would continue to support farmland values. This month, that had declined to just 1% of the producers in our survey. There's been a lot of interest in cover crop usage among U.S. farmers, so we asked a series of questions this month about cover crop usage. 57% of the respondents in our survey said that they had used cover crops on at least some of their crop acreage. And among those cover crop users, 40% have been planting cover crops for 5 years or less, while 10% reported planting cover crops for more than 20 years. That wraps up our results for this month's Ag Economy Barometer survey. You can get the full report on our website, purdue.edu/agbarometer, and you can get some more details about the barometer on our podcast, Purdue Commercial Agcast, which is available at our website, purdue.edu/commercialag. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.